Hey, folks, welcome to Money Me. I decided to go live. I just got home, and it's not like years ago if something was going on in the.
Hey,
Oh,
folks,
wait a minute. Let
welcome to
me
Money
mute
Me. I
that. Hold
decided to
on,
go
that's a
live. I
mistake.
just got
Too many windows open. Sorry about that. Um, I had my YouTube window up, but hey, I want to share the screen. Like I was saying, years ago, if something happened in the market, you wouldn't know. Now that we have our cell phones on, we can see everything. But I just posted this up on Twitter. Also, if you're following me over there on Twitter, Pat D's at Patstock 1972, I post some different articles on over there. But Facebook just got killed, just killed the market, and it's down over 20%, actually down 22, 24%. Anybody who owns puts is going to make a killing tomorrow. I mean, a lot of money. I'm going to pull up. Hey, Dave. Yeah, hey, Craig. Yeah, I had my YouTube channel pulled up. Rookie move, exactly. That's when you have too many screens up at the same time. But I'm gonna pull up my Weeble desktop app and we're gonna go over. But man, this market's in trouble, and I tell you. So anybody who has $10,000 in Facebook today, tomorrow it's going to be worth about 7,500. So you're not going to be making no money on Facebook, and Facebook, when you get these big companies that are going to be dropping like this, that's going to hurt the market. You got Amazon coming out with earnings this week. Let's pull up. Here, let me share that screen again. I appreciate you guys, even if you're just listening. Not sure anyone if you two follow the market or not, but you're getting these moves. I mean, you're talking about 250, $300 billion in capital wiped out just on, that was last week. No, that's this week. Okay, so this week, today is Tuesday the 2nd. So today you had Exxon, UPS. Oh, no, today's Wednesday. That's right. Yeah, Wednesday. What threw me off was the Meta. So, and the January 31st up top here. So you got, this is a good thing, and I've done a video on this before with Earnings Whisper, is that you can look and see, hey, when are your companies reporting, and whether you want to sometimes get out or not. I mean, you would have got out of Facebook, you would have saved yourself $75. And a lot of people got into Facebook the last week or so, or even yesterday, because Google, Alphabet's earnings were good, and they're doing a 20 for 1 stock split. So naturally, Facebook was up $8. But let's pull up the Weeble and look at this. It's down 23.7%. $76 after hours. Now that's after hours. You can't trade options after hours. But let me tell you, I saw one guy on Twitter said he bought the contracts for this week, the 300s, puts were $4.35. They were up 45% today. Those, let me make this a little bit bigger here. Let me put myself down there like that. These are tomorrow, even based on the opening, are going to be worth about $60. So 4,000 into 60,000, like that, overnight. I mean, because the normal move, let's say even if you had an 8% move, this stock would only be down about 20 and change. So even at a 322, you pretty much need it 300 to. I mean, this move is just crazy, and it's going to impact a lot of the stocks are going to be down tomorrow. Amazon, if this happens with Amazon, I mean, let's look at a chart here on Facebook. Now I don't know how they call it Meta. What the hell they call it Meta for? But Facebook now. I mean, Facebook you had back here in the January of 2020, 2 years ago, was at 237, and it basically lost 100 points. So it had lost like 40%. The next target really on Facebook, it's already broke the support here in the area around 274. It's already, 250. I mean, look, the average down here, 244. So that's the next one. And then the very next one is going to be, 244.13 is the next support. 229. I mean, this is bad. I mean, you got a big, basically, Facebook is the blue chip stock of the internet, and I mean, here you had the stock, and look at this. I mean, basically in September. When was that date? That date was September the 3rd. It was $384. Tomorrow, it should print in the 240s. That's a big move down. I mean, it was one of those companies, and that's really what's propping up the market right now. Is a lot of your bigger stocks, your Apples, your Microsofts, your Amazons. But let's see the market cap. I think it's back under $1 trillion. Let's see the news. So you could click on over here if you use Webull. If you guys are interested ever in signing up for Webull, now's not a time to be dumping a whole lot of money in the market, but you can open up a Webull account for free and put in $200 and they'll give you free stock. In the description below is a link. If you do that, I get like a free share or two. I actually got 3 free shares last year when I opened up my account, and wound up actually making a couple bucks because of the Zigna just got bought out. So here was the news. Let's see what it's saying. Obviously they missed. Let's see, earnings. They definitely had earnings. Yeah. I mean, how many? That's the problem with the growth with a lot of these companies. Meta. It just feels so weird to say Meta. Plunges as Facebook user stall forecast falls short. Social networking battling TikTok. YouTubers for users' time. Exact company reports heavy losses from virtual reality effort. Yeah, I mean, shares are down. They have 2.9 billion users. That's what I'm saying. How much more bigger can they get? They're saying revenue in the current quarter will be about 27 billion to 29 billion compared to 30 billion. So revenues are going to be about $1 to $3 billion light. I mean, it's still, you get this stock getting down in the 218 to 219 range. You're going to have, and even if you don't own Facebook, anyone that's investing into their 401k or mutual funds, I guarantee you there's a lot of mutual funds that own Facebook. So, the account, I mean, obviously because they're diversified and own a lot of different stock, the account will, but it will definitely have an impact on the market tomorrow. Facebook's, and I'm going to say Facebook. I didn't put Meta. It just drives me nuts to call it Meta. Facebook's net income was $10.3 billion. It was $3.67. The analysts had predicted $3.84. Fourth quarter revenue was $333.7 billion. They actually slightly beat that. So basically, the stock is down because they're talking about the quarter now that and now they're basically, their income for the year is going to be down about $10 billion because of investments in Reality Labs. I know now that I do YouTube and I have another YouTube channel that they are pumping a lot of money in wanting people to load up content and stuff like that, because they have so many people, and that's the thing. Even at 2.9 billion users, if they go down to 2.6 billion, it looks like they lost 300 million users, but they're still, I mean, they're the biggest social media, and they're gonna stay the biggest, but I think they're constantly gonna their growth is down. That's the issue. Even at earning $10 a share, though, at 25 PE, that puts the stock basically where it's at right now at $250. I think the long term, the big growth is probably over for Facebook, but it'll become just basically more like a blue chip, and they're going to be involved in a lot of things. I'm going to pull up. And I do appreciate everyone that's here. If you guys haven't watched the channel before, if you can like and subscribe and click hit the thumbs up, I greatly appreciate it. I see some danger in Amazon. I tell you, Amazon peaked at 3,700 back in July. But you got to keep in mind, I mean, it came off. It was, I mean, it's had a nice run in 2020. I mean, that's when it really, it more than doubled from the 2020 and a lot of people were ordering online, and I see it being a problem. I don't think it's worth as much personally myself as they claim. Amazon will come out with earnings after the bell on Thursday. If you get that stock down, I mean, let's look at the options on Amazon. Okay, so Amazon options for February the 4th. The problem is they're going to get expensive tomorrow. You know why? It's already down 106 after hours, and that's 3.5%. It's going to get expensive options tomorrow because there are going to be people anticipating a same type move that just happened in Facebook. So it's going to be priced that way. So it might be priced on a 15% move. And if you get a 15% move, there's not going to be no money to be made. Now at 2,900 after hours, let's just quick do the math. I'm using my calculator here. 2,900 times 20%. That's $580. That's $2,320. So, for example, if that would move the same way, $2,320. So if you got to $2,380s, now they're listed today as 50 cents to 85. So 80 cents was the last. But now the stock's down $100 after, so that probably is going to be $2.50. You literally could have that make 10 times your money. But let's say the stock only goes to, let's say it only goes to 23.80. You're gonna lose money. So that's where it's very tricky. People, the ideal time would have been to buy Facebook options would have been this morning, because everybody again was betting that Google was so damn good that Facebook was gonna do good too. And guess what? It didn't. So I really think that Amazon, though, I really think that we could see a move down into the 2,400, 2,500 area, right there. I mean, because it's been really chopping along in this area for a long time. Boy, once it breaks that, and then we get, and you go back and look at the chart. I mean, this stock, a couple of years ago, I mean, even 2018 was basically $1,000 stock. But where are all these experts at? And that's the thing. Full disclosure, and I have it in my description. I am not a licensed broker. I do this. I'm a regular guy that's investing and been doing this for 20 years. Decide I like to talk about it. Create the channel Money Me. I have another channel where I'm a reseller. I sell stuff on Amazon, sell stuff on eBay. But in the background, I like to trade stocks, options, mutual funds, and stuff like that. Last year was a rough year. I'm not gonna lie. And options killed a lot of people. And puts are getting very expensive because of all this. If I was anybody right now, I wouldn't be putting no big money into any stocks right now. You're going to have a lot. The market basically looks more inflated. There's been a lot of small caps that I've gotten burnt on. Fubu is one of them. I thought we were getting some. Here's a daily chart. I mean, we got some it bottom at 874 the other day. It was up to 11 and change. Well, now today, down 8%, another 4% after. So, I mean, you're going to have a lot of patience. I'm not getting out of this stock. I already took a beating on it the last 2-3 months. So I'm in it. I'm in it for really the next couple of years. And I mean, my average cost right now, which hurts. I mean, my average, there it is, $10. My average cost is $18. And that hurts. But, I mean, I thought, it was in the 30s. Let's see what Google's doing after hours. Now they call it Alphabet. Everybody got to change the damn name. Only down 1.5%. It had a good jump today. But broke out of this gap, and they're going to do a 20-for-1 stock split. So you're going to have for every one that you have, you're going to get 20. It's not going to change the value of your stock, because now instead of the stock trading at 20, it's going to bring that down to, well, it's going to be like $20. I mean, so they're just basically trying to get the regular small guy investing into the stock, which I don't quite understand, because anybody that knows, you can buy fractional shares. So let's see what Apple is doing. I mean, the market's going to be down tomorrow. Let me see what the Dow Futures, if they even post it yet. I think this market, and I've called for it, I think the market could correct 25%, and a lot of stocks already have corrected 25%. I think the market probably will end the year down about 15%. Nasdaq futures drop as Facebook leads tech stocks lower. So, I mean, it's gonna hurt tech stocks. Nasdaq futures is down 281 points. There are a couple stocks I like. I mean, I like AT&T. That stock has already been beaten up. 24. It's an old blue chip. I mean, here you had the stock that was up in the $34 range, and I like it here in the 22, 24. It's got a good dividend yield. I did like Kohl's. I sold Kohl's because there was speculation about them getting bought out. I bought it in the 48 range just recently, sold it at 62 and change. Nothing's come to fruition as far as the stock being, or the company being bought out. So that's a no touch unless it drops back down in the 45 range. Then I would get back into it. I actually like Ollie's for the long term. We bought a position into Ollie's. Excuse me, I'm a long day driving. It's in the 40s, but I mean, it was $125 back in beginning of January last year. I mean, it really had taken a whack last year when everybody closed down. It went from 65-ish to 29-ish. But I started taking position, and actually, I just I don't know if Dave is still listing. I just started buying a little bit of Bitcoin. Bought some Bitcoin and not quite how do you say Ethereum, the other crypto. But I'm basically, what I'm trying to do is accumulate a little bit of that every month, and then once I get to a point where I make some money, I'm going to sell some of it and just let the rest ride then, probably for the next 5 or 10 years, just to really, I think crypto eventually, it's good ones, not these junky ones that no one really knows about, or that there's a there can be fraud and stuff like that. I want to get involved with stuff like that. But Ford, I like too. The problem is I like a lot of stocks right now, good companies, but I've been burnt with some of these. I don't want to say bad companies, but I've had 3 stocks drop 50% in the last 3 months, and has really whacked. I'm managing my son's 401k, my other son's IRA. Now, my youngest son, who has the IRA at his work, and my wife's, we're just doing dollar cost averaging as far as into mutual funds. So, I'm not worried about that. But boy, if you have any individual stocks right now and you're getting whacked 50, 70%, that hurts. And if you don't have no fresh money, and that's a lesson to be learned, that I should have kept some money to the side to always for opportunities. But I did. I had sold. Terrible timing. I got into Exxon a couple times, bought and sold, and then I sold it at 62, and all of a sudden it went to 68. Now, I mean, here yesterday it was at 81.51. Got out of it, and hey, Arthur Leslie, I got out of it, and thanks for coming by. I appreciate it. There you go. I don't do lives much, but I got to get some watch time in, and figured that if some people want to put it on in the background, I would, have it up here. So I do appreciate you stopping by, Arthur. Good evening. Just talking about the market. I was on the way home from running around errands today, and I heard the news that Facebook is getting hit, and it's going to hurt the market. So, And you know that's the thing. Even if there's other stocks that are good, is once you get some of these big ones, what happens is people start selling their mutual funds, people start pulling back on positions. Then what they have to start selling stocks across. They can't just sell one or two stocks because they don't want to just whack. So they got to kind of spread it out and start selling other stocks for redemptions and things like that. So. If you guys are interested, like I said, in the future, and you want to have a certain stock you want me to pull up to look at, or if you're in a certain stock, just let me know. I wouldn't mind pulling it up. Here was a stock I don't know how much I talked about it, but Winnebago I featured a little bit last year and did pretty good with it. And I think and there's so much inflation going on, and it's going to eat into profits because employee wages going up. They kept on saying it was supposed to help the economy. It's not helping, and that stocks just really got overextended. A lot of them did, and now that we're in that correction phase. Everything pretty much peaked in November of 2021. Now we're at a point where. Look at the Chewy. Chewy's sells the food, the dog food and stuff like that. That stock, let's go back on the chart. That stock was 120, now at 44. Lemonade. Lemonade is a company that sells insurance that I had one time. Lemonade was 188, now 26. Another stock that I got burnt on, and this is why, again, full disclosure, was Poshmark. $15, and I actually had made a little bit of money in the $50 range and 40s and 50s and sold it, and then basically when it went down, it just never really stopped going down. Had little, but I mean here we sit at 1244. Is there any news on it today? Hamilton Lane Advisors buys. What did they buy? New purchases, added purchase, sold out. You can look at a lot of times, if you have the time, you can look and see what some of these big hedge funds are adding into or what they're getting in and out. This one's not good because they sold out of their Poshmark. So they got out of Poshmark. I wish that somebody would actually just buy Poshmark out. So it hasn't been good. Let's look at and see what other companies are reporting this week. Tomorrow, before the open, Nokia is going to report. Penn National, Merck. There's more companies. These are just the ones that earnings whispers, highlights. Merck, ConocoPhillips, Lilly, Honeywell, Cigna. Looks like Shell. After hours tomorrow is going to be, which is going to affect Friday morning. So let me tell you, if Amazon goes down at the same that Facebook goes down, Friday will probably be a crappy day for the market. Ford after hours, Snap. I wasn't a big fan of Snap anyways. I don't understand why any advertiser would advertise on Snap when it's a bunch of teenagers on there. GoPro, Skechers. And then Friday morning, this is good. So if you ever go, it's earningswhispers.com. You could check them out. Hey, Eric, thanks for stopping, sir. Just basically talking about Facebook's going to kill the market, and it's down 24. Here, I'll give you a live Facebook, a live. Thanks for stopping, Eric. I do appreciate it. It's. I tell you, when you're doing, it's hard doing another YouTube channel when you get 40, 50 in your other, and you're doing this and getting 4 or 5, but you got to build it up. And there are a lot of people that do the market. I'm just a regular guy, not selling a stock program or a sign up club. It's just regular guy basically talking about the wins and losses of the stock market and different things about money. So Facebook is down $248.70, $74 after hours. That's going to hurt. No, I think it did too. I wish the funny thing is, Eric, I had puts in it last week, lost a little bit of money, but it was up today because Google had good afterwards. But these companies have gotten to be too big, and they have a lot of power. The market caps are crazy. So, I could see why, I use, and that's the thing when I'm investing and doing different things, looking at, I look up information on Twitter. I look up information on Yahoo. Obviously I watch CNBC. Here's if you guys are ever on Twitter at all, I don't put much reselling stuff on Twitter. I mean, I do, but I don't have a big following on Twitter because I'm not there much. Yeah, I only have 124 followers on Twitter because I'm not really much of a person who tweets and stuff like that. But CNBC, let's pull them up and see. I'm sharing the screen here. The Nasdaq Futures, whoa, down 2%, 290 points. So you're definitely going to have like the likes of Nvidia. Let's see, Nvidia is down $8. Amazon is really, I mean, they're down 107 after hours. Let's say eBay's only down, but eBay's taking a hit too. I mean, look at the 52-week range on eBay, 51 to 81, and at 58, we're almost near the 52-week low. So we're definitely in a correction phase as far as that. And I wouldn't advise. Look at PayPal today. I saw PayPal. One time was down $150. I mean, basically making a new 52-week range back to the 52-week low, 129 to 310. And now we're back down, and they're blaming inflation. What was the news that they said? Wow. Yeah. Wonder what the market, what's the market cap on Facebook profile? Share market cap 200 billion. Oh, it's bad, Eric. I there's 3 stocks that I've I'm in the Posh, I'm in the Fubu, Till. I mean, I'm in a bunch of different positions, but like 4 positions in one account are down 50% since November. It's like, whoa. And it's at a point where I just can't even sell them. So it's going to be a rocky year. I did buy, actually, I took a small position, $1,000 position the other day. What I'm trying to do now is if I make, when I sold the Kohl's, bought it into Viacom. People are still, I mean, the 52-week range is 28 to 102. And actually, when it went to 102, it's not worth no 102. It's probably worth, honestly, in the 45, 55 range, but only a $20 billion market cap. PE is only 7. I mean, Viacom is the company that owns CBS, and they also own, they have a lot of movies and different things like that. So I think eventually, there's a company I'm surprised maybe like Netflix wouldn't go after, basically owning a studio. I mean, Netflix has their own studios because they're developing movies, and like they just did a movie with The Rock that was like the #1 movie. They do Ozarks. I don't know, Eric, if you invest or not, if you're into certain stocks or not, but PayPal, PayPal basically is like MasterCard, Visa. New 52-week low today. Jeez. So let's pull up the Webull. Let's see PayPal up here. Yeah, look at that. Let's pull up a weekly chart and go out further. Yeah, look at that. 310 index funds. Well, they're all falling, so I mean, I guess the hurt is not as bad, but I mean, you're not seeing 50, 70%, but obviously being diverse in like that it's much better. But let's see what Disney's doing. 142. Wage inflation is killing a lot of businesses. Let's see what Home Depot actually still doing pretty good. 420, 60. Well, I mean, you go, but let's go back on a couple. I mean, this has been a nice rise. My son worked there at Home Depot probably about 7 years ago. And I told him, I said, Nathan, you still would have been at the company. Look at that, 70 to 400. That was a nice move. This is a weekly chart, though, which you could see last week it was down. So that big red candle. That's why sometimes it's always good. There's with Webull, and it doesn't cost if you sign up for Webull, it doesn't cost you nothing to pull this up. You get these charts for free. It's sometimes nice to you look at a daily, a weekly, and and a monthly. So in other words, this wasn't last week. This was January. So Home Depot was down in January. So it peaked in December at 420.61 and closed at, this is the range of the stock. So you could see, you start seeing, obviously you start looking at some of these and you'll start noticing a clear pattern that months and months of drops. That's not good. Like Facebook here. 1, 2, 3, 4. 4 out of the last 6 months has been in the red. Disney. Let's see Disney. Yeah, look at that. They've had a lot of issues, obviously, with less people at the park, even though the park's busy. They're having to have less people and control the crowds, and I think we're in for a next rough couple of months. Disney, I like AT&T. Like I said, hey, 7 people in here watching. Thank you, I appreciate it. But look at this monthly chart. AT&T since January 20th. I mean, it's been nothing. But I think it's at a point where it's a safe blue chip. They own a studio. There's news out there about spinning off. They beat their earnings. That's what I like. Even here, you can dig into more of the news. Now I dig into a lot of things. How's Coca-Cola doing? Let's see Coca-Cola. Thanks, Arthur. Let's highlight your comment. The chart. Coca-Cola actually has been good. Coca-Cola on a monthly view, the last, basically including this month, 2 months in a row, been looking good. Let's look at a daily chart. Yeah, I mean, 52 to 61 is not. It's funny because you'll look at some of these other charts, like say Facebook, you'll see that like at 180 and it's 300. It's not a big, but it's a safe. Again, and I think safety. I mean, people are still buying soda. I mean, look, you go back 46. Let's even go back on a weekly chart. Nice, safe. Let's see what Pepsi's doing. Pepsi, basically the chart looks the same. Yes, for sure, Eric. But you know what? If you're dollar cost averaging and you're into mutual funds, now's a good time to. And I'm going to do a video on that. It's surprising or not how many people don't realize what even dollar cost averaging means. Putting in the same amount of money, but you get those days where, like when the market is taking a hit, you're going to get more shares. The days that the market's up, you're going to get less shares. But I think over the long run, I mean, we always look for basically a 10 to 12% return on the stock market, and the people the last couple of years have gotten used to stepping in the stocks and getting 100% return. And you got like Tesla, and Tesla's finally getting hit. Tesla is finally, look at Tesla. That's just a weekly chart. But let's go back on a daily chart. You could have back in, this is 2021. Yeah, but you could have went back. Let's zoom out here. You could have went back. Yeah, keep it simple. Yeah, if you don't want the KISS method, exactly. If you don't want to do the homework and look into stocks, you go back to January. Let's go back to January. Yeah, January, the stock was $85 and peaked out at was it 11? Yeah, 1243. Made Elon Musk the richest guy in the world. About $200 billion. But I see this stock just like anything in the market. It's definitely correcting. You're going to have people that trade up and down and stuff like that. I wouldn't get in that either. Again, right now, if anyone came into any money, I'd tell them, don't dump no huge amounts of money in. Dollar cost average. Oh, your brother's an uppity. Arthur, I actually worked at Coke one summer. I worked for Barta Beverages in Bethlehem, Pennsylvania. I used to live in the Lehigh Valley. Actually, it's not far. The plant is right off the highway there on 22. And I worked there one summer in the lab. I used to be the guy. Well, I say the lab. I worked kind of directly with the lab. When the production was done that day, I would actually sanitize. I would hook up the machines and the hoses, and you would run like a sanitizer chemical through and pressurize it and pressurize the heads, and then I would run that for you had to run that for like 2 hours because basically you only had so many hours. So if they went over, and it was neat to see the cans and the bottles being made. And then in between, I would, power wash the floor, the walls, and, the floors would. So back then, it only paid I think it was $8 an hour. And that's going back about 23 years ago. I worked there one summer, and the pay wasn't worth it for the drive. I kind of got spoiled because a lot of jobs that I had, 2 jobs that I had for a long time when I was younger, I was within 3 miles of home. And then I actually worked for a lot, I don't talk about it much on my other channel, but, I worked for a big food plant company called ConAgra, and I worked in their flour division. And I had saved money there even. And when I left, I had about $5,000 or $6,000 worth of ConAgra stock, and they spun off the flour division, but they make Healthy Choice and stuff like that. So I've always been interested in the stock market. I mean, my very first, when I turned 21, my wife had a surprise birthday party for me, and I got Disney stock from somebody as my first share as a gift. So I've always been interested in the market. The problem is, and a lot of people say it's gambling, and it can be. You can actually be involved too many days in the market, and that's why I haven't actually done as many videos on this channel, because I don't want that gambling mentality, especially when you're trading options, that you sometimes, if you're losing money in it, you just got to stop. You got to pull back. Don't have nothing on margin, and just wait things till they settle out, because you could even think shorting the market. I mean, I shorted Roku last year and Apple and got burnt. To the tune of about $12,000. And Roku, here, I'll show you. And if you watch an earlier video that I did, I had shorted Roku, and the minute that I covered, here's where I got in the 300 range, 390, and that video is up here. And that's funny because the thumbnail that I'm using on this one with me with my head down is the same one I use on that one. But I got into it and wound up taking I couldn't stand the pain anymore. And then it's like the minute I got out, boom, the next it dropped, and then you think, and then look, boom, it rises back again. But now look, I was in the 327, I just kind of kept, and now here we are to 156. So instead of losing, I had lost about $9,200 in that position, and it sucks because I had made some good money that year reselling and put it into the market, thinking, I can use that money to buy me more inventory. Yeah. And so some of that money that I worked hard for, I just gave it right back. And here we are in the 3-something. I would have made close to $12,000 instead of losing $9,200. I made a little bit back in options and stuff, but my problem with last year was with option trading. A lot of times, penny stocks are still a thing. I don't really ever get into them. I think they're shady, and I think any company, that's funny because you'll get people like, oh, I'll buy a 10-cent stock before I buy 100, and you try to explain to them, I'll say to somebody, if you have a $10 stock and it moves $2. And then you have a $200 stock and it moves $20, which stock, did better? And naturally, right away, they always say, well, the stock that moved $20 did better. Well, no. Percentage is percentage. 10% is 10%. Or 20%, in other words, if you have 10, it goes to 12, that's 20%. So if you have a $200 stock and it goes 20%, that's $40. Or 10, if it's 10 and it goes 10%, that's $1. If it's a $200 stock and it goes 10%, that's $20. It's just the numbers are larger. But I don't trust these penny stocks because I feel like a lot of times they are penny stocks for a reason. They are grumpy. I don't know. I don't know. Yeah, John, I don't know if John Chartier follows those types or not. I haven't. He was doing some music. I was actually on Scott the Bearded Picker show with him just recently, and he came on. But we don't Scott doesn't really follow the market, so I don't try to, when I go on somebody's show, kind of take over the theme, whatever they're talking about, or the subject matter. But I will always be interested in stocks, even if when I lose money, because I think it's still the best opportunities that when they do exist. I helped a guy in 2020. I was helping a guy with real estate, write leases and help, because I've been a landlord. Now I'm not a landlord no more because I sold the property. But my son is, and but I got him into Kohl's, Disney, and back in March, April of 2020, got him into Kohl's, Disney, and Viacom, and basically turned about $25,000 into about $60,000. Now I'm not sure if I haven't talked to the guy in the last 9 months. I don't know if he became greedy and didn't sell. I see that so many times, like even with Viacom. Viacom had a crazy. There was a short seller that was involved in it, and that stock here. Look at this. Look at this daily. Here's a weekly chart. Even Viacom had gone from like 30 some to like 100 and some. It was just crazy. And here to find out what happened was a guy had shorted it and with a lot of borrowed money and a big hedge fund. And he wound up having to cover it. Look what happened: 101.97, and then went boom right back down to the $40 area. Kohl's got into around. Kohl's at one time. Look at Kohl's when it was down into the $18 here back in. Well, it was even lower. It was $10.89 back when everything was shut down. Look at this, $10.89. I think we got in the average of 18, and then obviously here it is sitting at 58. He probably still owns that one. And Disney got in for around 125, 130, but Disney had bottom in the set. Yeah, here it was 79.07. That was a good. So, but it went from like we got in around 125, 132, and it had gone up to 180. But he's a guy that has a restaurant, has a garage, and a lot of times some of these people, I see it so many times, they'll get involved in stocks and they'll get involved in stuff and they'll make it double and triple their money and then they'll watch it just go right back down. It's like, why not? And there's a lesson to be learned with that. Why not at least take the profits out or your initial investment and then just let it run, and you're using the house's money. So if you put 30 in and it's worth 60 and you take 30 out, worst case scenario is you never lost money. Yeah, you gave back profits, but at least hypothetically, typically that's not going to happen. That if it goes from 30 to 60 and then you take your 30 out, that it's going to go back down to zero. Now there's people, I'm sure, like Tesla. If you would have took money out of that, you're like, what the hell? Oh, that's not Tesla. Hold on. Tesla. I didn't hit the A. That's what happened. Look at Tesla. I've read many stories of people over the last like 10 years. I was reading a story. Look back here, $3.48. You could have bought it across the board here in the from basically 2010 to 2012. You could have bought it anywhere from the $3 to $10 range. Tesla. So you had guys over the years. I read an article where one guy put in like 90 grand. You would have made a killing. Look, even back in 2019, I remember when it was 300 and some, and I'm like, oh, I can't keep going up. Guess what? It did. But just like anything, what can go up can also go down. And when it goes down, it seems to go down a lot quicker than when it does when it goes up. So, but hey guys, I do appreciate everyone that was here watching. I try to keep these short. This is a live. I'm hoping to grow the channel when I hit 1,000 subs. I'm going to give away some free stock just to kind of reward the people. Right now, we're sitting at about 325, 330 subscribers. That's about it. But if you get a chance and you want to, share this out and comment below, I'd greatly appreciate it. It's easier to go a little bit live longer as I get more people in here commenting about stuff. And I don't make no money doing this channel. It's not monetized. You need 1,000 subscribers and 4,000 watch hours. I do this just to, I enjoy the subject matter, and I'm hoping one day to get it monetized and make a couple bucks from doing it. And I think there is a need for a regular guy to basically, we're not offering stock advice. We're talking about my experience and what my wins, my losses, and just different things about making money and just sitting around, not making no money. So, hey, John Jones, thanks for stopping. I do appreciate it. Yeah, if you guys can give me a thumbs up, I greatly appreciate it. I'll see you around YouTube. Have a good night and stay safe.